Welcome to weekly view on markets. Nifty was down by 111 points during this week. Bank Nifty was also down by 172 points. There was a heavy sell-off in mid cap and small cap stocks during this week. Chart structures have become weak. Market reacted negatively to the US President speech after his swearing in ceremony. FII selling continues week after week. The market will look forward for the union budget announcements on 1st February. That could be a trigger for the markets. A good budget can trigger a positive sentiment and market recovery. Investors need to do staggered buying or SIP investments. Let us look at the performance of indices during this week. Nifty closed at 23,092. It has dropped below 24,000. It lost 111 points, closed with 0.48% loss. Bank Nifty lost 172 points, that is 0.36%, closed at 48,367. Midcap Index lost 1,344 points, that is 2.46%, closed at 53,262. Small Cap Index lost 4.05%, is 716 points and closed at 16,956. Small cap index dropping below 17,000 is a major psychological level that has breached. India VIX has moved up by 6%. It is at 16.74. Now let us look at sectoral performances. Other than three sectors, that is information technology, FMCG, and private banks, all other sectors were in the red during this week. Information technology gained 3.55%. FMCG stocks gained 0.48%. Private bank gained 0.30%. Realty sector lost more than 9%. Energy stocks lost more than 4%. Oil and gas stocks lost 3.85%. Media, consumer durables, public sector enterprises, that is public sector stocks, manufacturing, all lost around 3%. Auto sector, PSU banks, infrastructure all lost between 1 to 2%. Metals, commodities, pharma, they were consolidating with small losses. There were more declining stocks compared to advancing stock. It was a nightmare for the investors as their portfolios have gone down during the week considerably. Now let us look at technical charts. This is a daily chart of Nifty. We can see here the Nifty is at the support levels and it has been around these levels for almost now 2 weeks. Nifty has to come around 24,500 level or it has to cross 24,200 level. Then we can say there is a turnaround in the sentiment and bullish view will be there. This is a chart of Nifty Midcap Index. Here we can see Midcap Index is also consolidating around the support levels. It has to cross above 55,256. So when this level is crossed, we can say the sentiment has turned positive. This is a chart of Nifty small cap index. Small cap index is also consolidating around the support level, and if it has to cross 18,000 levels, then I'll have a positive view. Till such time, investors have to be cautious, and definitely it is an opportunity to buy good quality stocks at lower levels. This is a daily chart of Bank Nifty index. Bank Nifty index has support at around 48,000 levels, and it has got a strong resistance at around 50,000 level. Bank Nifty has to conclusively cross 50,000 level, then the sentiment will turn positive. But one good thing is that many banks have announced the results, and the results are as per the street expectations, and results, the market is reacting positively to the results. This is good for the Bank Nifty. But technically, only when it crosses 50,000 level, then only I will have a positive view. Now let us look at some of the macroeconomic fundamentals. RBI forex reserves is at 623 billions. It is down by 3 billions. After touching around 700 billions about 4 months back, RBI has been selling dollars in the market to stabilize rupee. That is the reason there is a drop in the RBI forex reserve. Rupee is at 86.22. This week, the rupee has slightly come down after hitting almost 87 levels, that is 86.90. Now it has come down to 86.22. The dollar index also, after hitting 109 level, it is at 107.25. Brent crude price has dropped. It hit around 80-81 level. From there, it has dropped to $78.56 per barrel. So it is expected that the crude price will remain subdued. Gold price is at 78,560 for 10 grams 24 carat. Mm, because of the global situation, there is a jump in the gold price for the last 2 weeks. But as Trump administration is going to take over, the gold prices may come down as he's talking about ending wars in Ukraine and with Russia, and also talking about the conflict in between Hamas and Israel. So if all these crises are resolved quickly, the gold prices will rise and they'll come down, and also that will have an impact on the crude prices. FIIs have been continuously selling. Last week they have sold around 25,000 crore. This week again they have sold 22,504 crores. BIS bought 17,577 crore in equity during this week. DII buying has not matched FII selling. That is why we have seen drop in the market in this week. And definitely there is a panic selling in mid and small cap stocks. One of the highest selling by FIs during this week. In this month, they must have sold more than 50,000 crores already. Chart structures look weak. We have looked at the charts. They are at the support levels, but from here, whether they will drop further or they will stage a recovery, we'll have to wait and watch. Overall sentiment looks negative as indicated by India VIX, which has gone above 16 level. Trump policies are negative for Indian markets after the Trump speech and his statement in Davos, that is the World Economic Summit. He has clearly stated that all companies should manufacture in US or otherwise they have to face stiff tariffs. So if Trump is going to impose tariffs on other countries, the world trade is going to slow down. That will have impact on all countries' GDP growth. So that is why our overall market sentiment is negative on Trump policy. Q3 results are not very encouraging. Whatever results are announced so far, the revenue of large cap is up by only 3%, profit is up by around 11%. Mid cap sector stocks revenue is up by 6%, profit is up by 36%. Still more companies are expected to announce results. This is the summary of the results announced so far. Small cap stocks, the revenue up is by 6%, profit is down by 17%. This is why we see heavy selling in small cap stocks in last 2 weeks. But having said this, the drop in mid and small cap sector is giving a opportunity for investors to buy good quality stocks. When the market falls, even the good stocks falls, they give an opportunity to buy at lower levels. Staggered buying and SIP investing is a good strategy for the investors, while the long-term prospects remains positive for India. Short-term volatility is there and correction is there. Market valuations were quite high. So since GDP growth is slowing down, companies' profits are not good. It is very much expected that market will correct. So market correction is a process that will keep coming. But overall, the Indian growth rate is better than all other countries. Investors should remain invested for long term. Mutual fund investors should continue their SIPs. They will get good returns in the long term. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. If you have questions, you can ask them, which I will reply. Last week, there was a question regarding Adani Group and Hindenburg. Hindenburg has declared that they are going to close down. While overall it looks like that it was a malicious attempt on the Hindenburg to attack Adani companies again and again. And also they have made remarks about SEBI. And some groups within India also were trying to attack government based on the Hindenburg report. So now it all looks like a concocted story. But having said that, when initially Hindenburg report came, the Adani Group stocks were at sky high valuations. Those stocks have corrected. Still, they are at a premium valuation. One needs to look at the valuation and the profitability of those companies, do a fundamental analysis, then buy Adani stocks. With this, so much of noise around Adani companies, the corporate governance in Adani has definitely improved in last 2 years. So if the growth and profitability of those companies are good and valuation is good, people can look at investing in Adani company. My view as of now. We'll meet again next week. Thank you.